Good morning. Let us start insolvency of partners. Insolvency means when the assets of an individual is less than the liabilities, he can apply for insolvency in the court of law, and the court of law if sanctions insolvency, then nobody else will trouble him by asking for the amount lent to him. So, this insolvency in case of a partnership firm, if one partner becomes insolvent, what will be the effect? If two partners out of three suppose will be insolvent, what will be the effect? And if all the partners are insolvent, what will be the effect? That we have to see in this class. Actually, the loss on account of realization will have to be shared in their profit sharing ratio of the partners. But if a partner is not able to bring equal amount equal to his loss on realization, his share of loss on realization, then what will happen? Who will bear it? Previously, it was treated just like any revenue loss, and it was brought by the remaining partners in their profit sharing ratio. But in a famous case, the case is Garner versus Murray. Justice Joyce gave this verdict that insolvency, in this case, that is Garner versus Murray, he has given the verdict that in case of insolvency of a partner, if there is any loss on account of the insolvency of a partner, that is not an ordinary loss, so cannot be shared by the partners in their profit sharing ratio. Rather, it is a special type of loss which is to be borne by the partners having credit balance to their capital as it stood just before the date of dissolution. That means, only those partners who have credit balances, again they should be solvent partners, so if there are three partners, one partner becomes insolvent, two others are solvent partners. Out of them, if one has got credit balance, the other has got debit balance on that date, just before the date of dissolution, then he will not be liable to pay anything out of this loss. So, a partner having solvency and having a credit balance to his credit in the capital account will bear it in their capital ratio. The capital as it stood just before the date of dissolution. So, in short, let me sum up this thing, that according to this Garner versus Murray case, according to the verdict given by Justice Joyce in this case, the loss on account of insolvency of a partner is a special type of loss, and that loss will have to be borne by the remaining partners, remaining solvent partners out of who have got credit balance in the capital ratio. Which capital? The capital as it stood just before the date of dissolution. So, now we have to work out problems on this when the one partner is insolvent, when two partners are insolvent, and when all the partners are insolvent. Coming to the problem now, following the balance sheet of Messrs. Svetlana Fabrics, in which A, B and C are in partnership, sharing profits and losses in the ratio of 6:3:5. Their profit sharing ratio is 6:3:5. Then the balance sheet is given: sundry creditors, loan on mortgage of land and building, capital accounts of A and C are credit balances, and B's current account is in the B's capital account is in the debit side, A's current account and C's current account are showing credit balances. Then land and building, this is a fixed capital method. So, we will do it like this: land and building, stock, sundry debtors, furniture, cash at bank and BIS current account, these are given. It was decided to dissolve the firm as on 31st December 2015. The assets realized as under land and building, furniture, etc., sundry creditors agreed to receive 75 paisa in a rupee. It was ascertained that B had become insolvent and B's estate had contributed only 50 paisa in a rupee. Prepare realization account, bank account and partners capital accounts. So, we will be opening a realization account, partners capital accounts and bank account. Also, we have to prepare one bank account. First of all, sundry creditors 30,000 by sundry creditors, then loan on mortgage 4,000, but they have got a lien on land and building. Capital account SC 25,000 and 15,000 by balance brought down 25,000 and 15,000. Their current account is there, let us merge it in the capital account also by transferring it to the capital account. By current account 1,500. Then coming to the asset side, land and building 10,000, stock 23,100, then sundry debtors 30,000, furniture 5,000, cash at bank 2,500, two balance brought down, then BIS current account 4,900. Oh, this is AC. Achha. BIS current account 4,900. To current account 4,900. I have wrongly written here BIS account, it will be C 15,000 and 500 and this will be nil. It was decided to dissolve the firm as on 31st December. The assets realized as under land and building 6,000, okay, land and building 6,000, actually out of this 6,000, 4,000 rupees will have to be given immediately for the loan and mortgage. Anyway, that will give 4,000, then land and building 6,000, furniture 2,000, furniture 2,000, stock 15,000, stock 15,000, then sundry debtors 20,000. In this way, total amount of 43,000 has been collected. So, bank account debited to realization account 43,000 by bank 43,000. So, this is the double entry completed. Now, immediately we have to give 4,000 rupees because the loan on mortgage was on the land and building which has realized more than 4,000, that is 6,000. So, let us give 4,000 rupees to loan on mortgage. So, here we can write to bank mortgage loan 4,000. So, here by realization account mortgage loan 4,000. Then sundry creditors agreed to the expenses of realization amounted to rupees 2,000. To bank expenses 2,000, bank account is credited by realization account expenses 2,000. Then creditors agreed to receive 75 paisa in a rupee in full settlement. So, out of 30,000 we have to give them 75 paisa. So, 30,000 into 75% is coming to 22,500. So, we can give them to bank creditors 22,500. 22,500. Then bank account will be credited by realization account within bracket creditors 22,500. Double entry you can mark that it is being completed. Then loan on mortgage was repaid, we have already repaid it. It was ascertained that B had become insolvent and B's estate had contributed only 50 paisa in a rupee. Prepare realization account, bank account and partners capital account. So, now we will have to see whether there is profit or loss, and you can see here that this side is bigger and this is coming to, these two have been paid, okay. This has been realized. What is the total? $96,600 this side, and this side is coming to 7. So, 600, 19,600 is the loss. So, by loss on realization 2, we can give it to A, B, C, A, B and C. So, this will have to be this 19,600 will be distributed in the ratio of 6:3:5. So, total is coming to 14, 6 by 14 of 19,600. 19,600 divided by 14 into 6 is equal to 8,400. Divided by 6 multiplied by 5 multiplied by 3 is equal to 4,200 for B. Divided by 3 into 5 is equal to 7,000. The total is 19,600. In this way, this account is closed. 96,600. And the repercussion of this particular entry will be by loss on realization. Realization account credited by ABC or ABC account debited to realization within bracket loss, that is 8,400, 4,200 and 7,000. Okay. Now, we have to close B's account first, because B is going to be insolvent and only 50 paisa in the rupee can be collected whatever amount is due from him. So, here what we have to do is first prepare B's account. B's account is having nothing in the credit side, but here it is 9,100. 9,100 is the balance in B's account. So, out of 9,100 he is bringing only 50%. So, 50% of 9,100 by bank, that is 4,550. You have to remember here that whenever a partner is insolvent, whatever amount he brings will have to be recorded. He may bring less or more, whatever it may be. But in case of others, they will have to bring cash equal to their share of loss. That we will see. He will bring 8,400, he will bring 7,000, and then the amount will be settled. Now, out of this 4,550, the remaining balance 4,550 out of 9,100, if he is giving cash 4,550, the remaining 4,550 is due to the insolvency of a partner. So, this loss is a special loss, and according to the case of Garner versus Murray, we have to distribute, or it will be borne by A and C, that is the remaining partners, who are having capitals of 25,000 and 15,000 on the opening day. So, because it is a case of fixed capital, we need not take into consideration the other things. So, in the ratio of 6:5, they will have to distribute. So, what is their capital? 25,000 and 15,000. The profit sharing ratio 6:5, but the realization loss will be distributed according to the profit sharing ratio, but the insolvency loss, loss on account of insolvency of a partner will be shared in the capital ratio of 25:15. 25:15 means 5:3. So, it will be 5/8 by A and 3/8 by C. So, let us see what is the amount by A by C. This will be 5/8 and this will be 3/8 of 4,550. So, 4,550 divided by 8 into 5 is equal to 2843 or 0.75 or 2844. 2844. And 3/8 means divided by 5 multiplied by 3 is equal to 1706. It is coming to 1706. Now, let us make the double entries of these three. by bank 4550. So, bank account debited to B. If B account is created by bank account debited to B's capital account 4550, and B's account is created by A, created by C. A and C account debited to B. How much? 2844 and 1706. In this way, we have to write all these things. So, double entry is completed now. Now, let us come to close the other accounts. Whatever balance is there, that will be taken or given by A and C through bank. Now, let us this thing is okay, 9100 is completed. Now, come to A's capital account. A's capital account is 26,000 this side, 26,000. So, the remaining amount will be to bank, that is the final settlement. To bank 26 minus 26,000 minus 8,400 minus 2,844. So, that is coming to 14,756. 14,756. So, this entry is A's capital account debited to bank, or bank account is created by A, by A's capital account 14,756. Then coming to close C's account, it is again greater in the credit side, 15,500, 15,500, and 15,500 minus 7,000, 8,706, 8,706, 6794. It is coming to 6794. So, this will be by C's capital account 6794. Now, let us make the total. This account is closed. Now, if this side is going to be closed automatically, then our problem is correct. So, this is coming to 0, 5, 50,050. So, it is coming to 50,050 in both the sides. So, when the bank account is showing same totals in both the sides, our problem is correct. So, that is insolvency of one partner. Now, let us take one problem where all partners excepting one are insolvent. That means, only one partner is not insolvent. Out of 3 partners here, 2 partners will be insolvent. That means, only one partner is surviving. In that case, how the entries will be made, who will bear it? Let us see. A, B, C are equal partners. Following is their balance sheet on the date of dissolution, that is sundry creditors A and B, then cash assets, in the asset side cash, goodwill, other assets, ceased drawings are given. Assets realized only 5,000, the creditors are paid in full, realization expenses totals to rupees 300. B partially meets his deficiency by contributing rupees 500. C totally fails to, as he is insolvent, he is not giving anything. Close the books of the firm by preparing cash account, realization account and capital accounts of the partners. So, we will have to open one realization account, one capital account and one cash account. So, the ratio is 1:1:1, that means equal ratio. We have to open one realization account and also the bank account. These three accounts are required. First, let us take ABC are equal partners, sundry creditors is 3000. Buy sundry creditors 3000. Then capital accounts 10,000 and 1,000 so far as A and B are concerned. Buy balance brought down 10,000 and 1,000. C does not have any credit balance, rather C has got a debit balance of 1,000, 2 balance brought down, $1,000 debit balance. Then we have got cash 2,000, that means 2 balance brought down, 2,000. Then goodwill 3,000 in the asset side to goodwill. Then we have got other assets 8,000 to other assets 8,000, that is the balance sheet is posted. Then assets realized only rupees 5,000. So, that will be bank account debited to realization rupees 5,000. So, realization account is created by bank 5,000. The creditors are paid in full. Creditors 3,000, realization account debited to bank 3,000 and bank account is created by realization account 3,000. So, all the assets amounting to 11,000 is realizing only 5,000 and that is recorded here and here. Double entry is to be completed. Okay. Then the realization expenses totals to 300. To bank expenses 300, by realization expenses 300. B partially meets his deficiency by contributing 500. Now, let us see what is the deficiency. Already he has got a deficiency of 1,000. Let us see whether there is profit or loss. There is loss on realization. So, which will be shared among the partners in the ratio of 1:1:1 because they are equal partners. So, it is coming to 14,300 minus 8,000 is equal to 6,300. So, 2,100 each. By loss on realization to A, B and C, that will be 2,100 each. $6,300 and this will be posted realization account created by ABC, ABC account debited to realization, that is the loss 2,100, 2,100 and 2,100. Now, we can ask the partners to bring cash equal to this amount. Now, according to the question, B partially meets his deficiency by contributing 500. B has to give actually 2,100 minus 1,000, that is 3,100, but he gives only 500. Anyway, whatever he brings, let us see, by cash or by bank. B gives only 500. C totally fails as he is insolvent. So, first of all C will be insolvent, he will not be bringing anything. So, what we have to do is, first of all we will ask A to bring 2100, he brings. Then we ask B to bring 2100, but he is able to give only 500, he does not have anything else. So, there will be deficiency again. Let us see. Then C is having 2100 to pay towards the loss and realization, he gives nothing. So, as a result this C is debited with 3100 and C does not bring anything, means it will have to be borne by A and B. But in the meantime B has also become insolvent. So, the entire amount of 3100 will have to be borne by by A, deficiency of C, that is 3100. So, A's account debited to C 3100. Coming to B again, B is having 2100 debit, 2100 minus 1100 minus 500, 600 deficit, he is also not bringing, that is also brought by A. So, A's account to B 600. In this way ultimately whatever remains, that he will be getting cash. So, his capital is 12,100 minus this to bank, balancing figure, A's account debited to bank or bank account is credited by A. So, capital accounts are showing 12,100, 2,100 and 3,100. So, to cash 6,300. Now, coming to cash, we have got 2,000 and 5,000, then these 2,100 and 500, that will be here, to A 2,100, to B 500, and this will be by A 6,300. Now, let us total it. If it is correct, then our problem will be correct. Let us see. This account is closed, this account is closed. So, it is coming to 600, 9,600, 600, 9,600. The problem is correct because the bank account in both the sides are showing equal balance, both the things. So, bank account is showing 9,600 in the debit and credit, that means it is closed. Realization account was previously closed. Partners capital account, after making the deficiencies of B and C by A, he is going to get a net amount of 6,300. Here it is. This is the debit, this is the credit effect. So, this is about your two partners insolvent. Now, we will take up a problem where all partners will be insolvent. Both A, B, C, whoever are there, all are insolvent. In that case, one special thing we have to mark is that the sundry creditors etc. will not be transferred to the realization account. This is the specialty of this case, and rather they will also bear, because all partners have become insolvent, nothing can be received from them. So, ultimately it is the creditors who bear the loss. So, there will be the deficiency and there will be one deficiency account, and the deficiency account should be closed and that is the proof that our problem will be correct. So, let us take up one problem where all partners are insolvent. This is the question. Arun and Barun are equal partners in a firm. At the date of dissolution, their balance sheet was like this: sundry creditors, capital of Arun and Barun, cash, debtors, stock, furniture, goodwill are there. The assets realized 4,465, realization expenses 176, prepare creditors account, cash account, realization account, partners capital account to close the books of the firm, assuming that both the partners are penniless. That means they are insolvent. So, here we have to prepare realization account. First, we will open one realization account, then sundry creditors account, then one deficiency account, then partners capital account, and we have got the bank account. Since all the partners are insolvent, the creditors cannot receive in full, rather they will bear the deficiency of the partners. To arrive at the deficiency in capital accounts of the partners, creditors account is not transferred to realization account. That is the specialty I told you. Further, a deficiency account is opened to show the amount remaining unpaid to the creditors and deficiency of each partner due to insolvency. So, here we will be coming to the first realization account. Realization account, cash 405. So, bank account debited, to balance brought down 405. Then by loss and realization we will be coming to that. The debtors 2342, 2342, 2 debtors. Then stock 2670, then furniture 1486, and goodwill 3067. Coming to the liability side, we have got sundry creditors 6670, This was transferred previously, but now in this case we will not transfer, rather sundry creditors account we can write by balance brought down 6670. So, this is the speciality, we will not transfer it to the realization account. Then capital of Arun and Barun are 2100. We can write Arun, A for Arun and B for Barun, A and B, by balance brought down. Their capital was 2100 and 1200, but the ratio is equal, profit sharing ratio is equal. Now, the assets realized 4465, bank account debited to realization account 4465, by bank 4465. Then now if you take the total, then there is some expenses also. Realization expenses 176 to bank expenses, and bank account will be created by realization expenses 176. Then by taking all these things 1, 2, 3, 4, 5, all the 5 assets and expenses taken together will be, the total will be 97 9741. So, if we write 9741, the loss by loss and realization to Arun and to Barun, half of it will be 9741 minus 4465 will be 5276. 5276, and 5276 will have to be shared equally, that is 2638 each. So, A's capital and B's capital will be debited to realization account 2638 2638. Then they are not able to bring anything. So, sundry creditors account will be taking only whatever amount is left. So, that will be we will take the total, it is coming to 870, 4870, 4870 by creditors. We will give everything possible to the creditors. So, it will be 964, 4694, 4694, that one. So, sundry creditor account debited to bank 4694. So, what is the deficiency? The deficiency will be sundry creditor account debited to deficiency account 6670 6670 minus 4694. So, that will be 1976. So, by this deficiency account will be credited by sundry creditors 1976. Then coming to close these accounts, capital accounts, because both the partners are insolvent, they cannot bring anything. So, let us see how much who is bringing and what is the deficiency. Here it is 2638 for both. No one is having 2638, neither they can bring any cash because they are insolvent. So, by deficiency, that the balancing figure 538 here and it will be 1438. So, deficiency account will be debited. AB credited means deficiency account will be debited to A to B. To A how much? To A it is 538, to B it is 1438. In this way the total comes to 76, 976, 1976, 1976. Because the deficiency account is closing automatically, that means the problem is correct. Here the bank account is not the concluding proof, rather the deficiency account is the concluding proof. So, with this we complete this insolvency, and only one thing is left, that is piecemeal distribution, that we will discuss in the next class.